I've recorded this short video to tell you about the main issues around mandatory payrolling of benefits in kind, or BICs, from April 2026. I've written a more detailed article on this which you can find on the link which accompanies this video. 2 years is a very short time in tax. It amounts to around 450 working days. Between now and then, HMRC and all employers and agents need to prepare for the changes. Many employers already payroll some benefits in kind and then complete the P11Ds and a P11DB for the ones which can't be payrolled, which include beneficial loans and living accommodation benefits. They then pay the Class 1A national insurance on those benefits separately. But in 2 years' time, there will be no more P11Ds and all BICs will be payrolled under the real-time information regime. There are lots of considerations which need to be ironed out between now and April 2026, as I'm sure you can imagine. Software, HR and payroll systems need to be reconfigured once everyone has a clear understanding of what is required. Employee cash flow is important. At present, it is not known whether the overriding limit principle set out in the pay-as-you-earn regulations will be changed. That principle currently prohibits an employee having taxes to the value of more than 50% of their normal salary deducted in any one pay period. There is, however, likely to be an overlap situation in 2026-27 as the two benefits in kind regimes phase out and phase in respectively. And there are also things to think about for employees with chunky BICs who leave the employment, as well as modified payroll workers and those working overseas on double tax treaties and certificates of continuing liability for national insurance purposes. Admin-wise, payroll, HR, practice staff will need to receive relevant training to enable them to advise clients and colleagues alike on the changes. Terms of engagement and service level agreements will require revisions, and payroll work will need to be recosted and agreed with clients in advance. Will you be able to recoup the revenue losses from the P11D work in your firm, for example? And don't forget the employment law side of things, which needs to be on the list as well. Contractual terms may need to be revised, requiring professional employment law advice, especially in a unionised employment setting. Draft legislation will be published later this year for consultation as part of the tax legislation cycle. It will be interesting to see what is planned and what effects the payrolling of BICs has on the tax-geared penalties regime and the inevitable employer compliance focus that will accompany it. ICAS is at the table. We're engaging in forums, completing consultation responses on your behalf. So please do have a read of my article and see what all this good stuff means for you and your clients. For now, thank you for watching and goodbye.